Now, please.
Yes.
What it says in the question number 9. A Transtant, our company operates an emerging market with a fast growing economy where prices are increasing frequently. Which two of the following statements are true when the historical cost accounting concept compared to current value accounting in this type of markets? Which two? Is it right? Which two are the things? Which of the two are true? Is it right? Historical cost accounting is financial statements. Current value accounting is the inflation accounting. Okay? Next. Capital employed, which is calculated on the historical cost, is understated. Is it right? See the things. Historical cost. Is it right? Historical cost. And this is current cost. Is it? Definitely current cost will be more. Is it? Because of what? The reason is current cost means it is the what is the current value. Is right? Current cost is nothing but the what is the current value as such. Is it right? What is the now what they say his capital employed, which is calculated on the historic, is understated. Assume that capital employed is 10,000. Is it right? It will never change. Okay, it will never change. Whereas current cost is as per the time value of money. Is it right? As per the time value of money. Is it right? As per the time value of money, what will happen? The money value will increase, but the actual value of the money will decrease. As the time increases, value of the money will decrease. Current cost is nothing but it will be how much? 11,000. Assume, is it? Last year it is 10,000. This year it is 11,000. Is it right? If this is the case in these two terms, what happened? This is understated. Is it? Is it? It is understated. Historical profits are overstated. Is it right? Historical profit are overstated. Definitely. Is it right? Historical cost profits are overstated in comparison to current value profits. Is it right? Now, this is with respect to what? This is with respect to financial statements. And this is with respect to income statements. Is it right? Income statement. Historical cost values are overstated. Is that current? When we take into consideration time value of money, is that it is like P present value. Is that present value 1 divided C divided by 1 plus R to the power of 1. Okay, this is the present value. Current value is nothing but the present. Now, if you take into consideration, in historical cost, we will not do anything. 10,000 will be 10,000 only profits. Okay, 10,000 will be 10,000. Now, whereas in the current value, present value, assume 10,000 divided by R value is how much? Assume R equal to 10%. Is it right? 1 by 1.10 to the power of 1. It comes to how much? 9,090. Now, which is what's happening if you take into consideration this one. If you take into consideration, this is understated and this is overstated. Whereas here, what's happening? This is overstated and this is understated. Capital employed is capital employed is calculated using historical cost is overstated compared to the current value. It is not overstated, it is understated. Historical cost is understated. Historical cost profits. Historical cost profits is not understated. It is overstated. And in capital employed is not an overstated, it is understated. Answer is which one? Which one is answer?
Last one.
2. 2.
Two. First one and last one.
This one is wrong. This is overstated. This one is wrong. This is understated. This one is understated. See the things. Is right? See the thing. This is understated. Okay? And this is what? This is overstated. I showed you by numbers. Okay? I showed you by numbers that how it is going to be worked it. Is it clear?
Yes, it's clear.
Okay. Any doubt is there? You ask me. Okay. You ask me. That's very important. Now, Patula company acquired P and S. Is it right? This is 80% and this is 20%. Okay. On when they have acquired 1st October 2005. At this date, Sanka's inventory carrying amount is how much? Inventory is how much? Inventory is 600,000. Is it right? And the fair value is how much? Fair value is 800,000. Okay? Fair value is by December 31st, 2005. 70% of the investment has been sold. Is it right? They have sold how much? They have sold by December 31st. Is it right? By 31st December, is it right? By 31st December, 70% is sold. Okay? By 70% is sold. What they are asking us, by the individual statement financial position of 31st December for both the companies show the inventory is how much? 3,250, 1,000. What will be the total inventory? Is it total inventory? Total inventory means 3,250 plus. Okay? 3,250 plus. Fine? Now, 3,250 plus. Is it right? Inventories. We have to remove the inventory of unsold inventory. Is it right? Where the 70% of the unsold inventory 70% has been sold, means 30% is not sold. Is it right? 30% unsold. Is it right? 30%. Is it right? Now, is it right? Total inventory. Is it right? Total inventory. Total inventory. Okay. Patula. Patula inventory is how much? Patula inventory is 3,250. Okay. Patula inventory is put A. Okay. Separate it. Next, we will do separately for the one. Okay. Next, what is the Sanka Sanka inventory is how much? 1940 minus, is it? Is it? It plus unrealized profit. Okay? Unrealized profit. How much is the unrealized profit? 800. Is it right? 800 minus 30%. Is it right? 800 minus what is the fair value? Fair value is 800. 1 minute. Fair value is how much? Fair value is 800. 800. Carrying amount is there now. The carrying amount is how much? Carrying amount is 600. Is it right? 600. What is the balance? 200,000. Is it right? Percentage of 70% is unsold. Is it right? Unsold. Unsold is how much? 30%. Is it right? 30% is unsold. 200,000 into 0.3. Is it right?
$60,000.
How much?
$60,000.
60,000. Okay, unsold is how much? 60,000. 60. It is all in thousands. Okay, it is all in thousands. 1940 plus 3250 plus 60. How much will get? This is how much? This is how much? 0,002. Is it right? This is B. Okay, this is B. This is B. A plus B. A is how much? A is 3,250. B is how much? B is 2,000. Total is how much? Total is 5,250. They are asking only what? They are asking only the what is the unsold, is it right? By December, the individual store, what is the total inventory? They say what is the total inventory? Percentage of is it right? To be shown. Total inventory of the parent company and the unsold inventory of the subsidiary company. How much? 5,250. Are you okay about this?
Yes, it's clear.
Now, what they say, top grades of has been trading for a number of years and is currently going through a period of expansion. Okay, period of expansion. An extract from the statement of cash flows for the year. Not net cash flow, inventory operating, inventory financing, increase, beginning and closing. Okay, beginning and closing. What is the question they are asking? Which of the following statement is correctly according to the extract of top grades? Is it? Now, what they say? The company has good working capital and management. Net cash generated from financing activities has been used to fund. No, financing activities. What? Financing activities talks about equity and debt. Okay, it is not non-current assets. It is equity and debt. Okay, net cash generated from operating activities has been used to fund addition. No, net cash in operating activities is nothing but, it is nothing but from operations plus current assets and current liabilities. It is not non-current asset. Existing no 1 minute. Net cash generated from operating activities no 1 minute. What they are saying 1 minute. The company has good. Which of the following statement is correct according to the extract of top trade company's statement of cash flow? They are saying that how the net current assets is funded. Is it right? Is funded. Is it right? How net current assets? How you will get amount to fund net current assets? Is it right? How you will get amount to fund net current assets? The company has good working capital management fund. This is related to current assets and current liabilities. Net cash generated from financing activities has been used to fund additions to non-current assets. Net cash, we never generate net cash from financing activities. Financing activities are what? Here I will write. Is that when we are talking about the financing activities, is that financing activities what? You are talking in terms of equity, is it right? You are talking in terms of debt. This is not generated, you are borrowing, is it right? Net cash generated from finance has been used to fund the additions of non-current assets. Actually, we don't generate cash from financing activities. Is it? There is a cash inflow and cash outflow. Okay, there is a cash inflow and there is a cash outflow. Is it? Net cash from operating, net cash from investing, net cash from financing. See, now what I will say is first we will take operating activity. See, this is the rule of cash flow statement. You will come across in level 3, okay? You will come across in level 3 about the first operating activities. In operating activities, you will get profits or losses. If it is profit or losses, then then you will think in terms of investing activity. Is that if there is a cash inflow and outflow, what will do? Then you are thinking in terms of financing activities. This is the cycle, okay? This is the cycle, and this cycle will always continue, okay? Is that this cycle will always continue. Fine. Now, whatever the profits you will generate from the operating activities, that operating activities you will what is an investment activities? Investment activities is only related to what? Non-current assets. Is it? Financing activities is how you are going to borrow, is it right? You have to borrow, you have to invest, you have to generate, is it? You have to generate and you have to get the things done, is it right? What the question says that if net current assets, net cash generated from operating activities has been used to fund the additions of we'll see what is there. As existing non-current assets has been sold to cover the we will never going to sell it and we are going to buy another assets. Is it right? This is totally wrong. Is it right? This is also totally wrong. Is it? Now, we don't use the cash generated from financing. We use cash generated from operating, because in operating activities there are the profits or there will be losses. We will take into consideration profits, we will reinvest it, and we will going to get into consideration which one? Non-current assets. Is it right? Answer is B or C.
C.
Rooney Company acquired. Which one? Mark. Is it right? It is 70%. I will write here. It will be easy. Rooney Company acquired Mark. It is how much? 70% and 30%. It's only subsidiary on when? 1st January 2006. The fair value of NCI, is it right? The fair value of NCI is how much? It is how much? 1.1 million. Okay, it is how much? 1.1 million. At the date, or at that date, the fair value of Merck's net assets, is it right? The fair value of net assets are how much? Net assets are how much? At the date, the value of Merck's net assets were equal to the carrying amounts, except the building, which has a fair value of 1.5 above the carrying amount. Is that only the buildings is 1.5 million more? Is it right? 1.5 million more. During the year 2000, when they have acquired, that's very simple. 1st January 2006. Dates are very important. During the year 31st January 2008, during the end of the year, Merck sold golds to Rooney, which gives an unrealized profit of how much? 550,000. And Merck profit after tax is how much? 3.2 million. Unrealized profit is 550, and the profit after tax is how much? 3 point. Using the pull down list provided, state the amount to be present as fine, NCI. We have to calculate NCI. What is the formula for how we have to do the NCI? Please tell.
Fair value of NCI
Good.
plus 30% of post acquisition of net asset subsidiary
Plus.
subsidiary
Good.
minus impairment if we have impairment.
Fair value.
But first we need to calculate the net asset of the subsidiary.
They gave you the net assets of the subsidiary. Yeah, where is that? At that date, the fair value of Merck's net assets were equal to the carrying amount. Only which one is different? Which one is different? The difference is only with respect to the 1.5 million buildings. Is that?
Yes.
And 1.5 million buildings, the carrying amount, how much is the life? 30 years. Means you have to calculate depreciation on that.
Yes.
And they say that it is the there is a goods has been sold, unrealized profit is there. Is it right? Is that unrealized profit is there? You have to remove that unrealized profit. Is it fair value fair value of NCI at acquisition. How much? 1.1 million.
1.1.
Put it this as A. Put dash. Okay. Next. How much is the profit for the year? Profit for the year. Post acquisition profits. Is it right? Is it right? Post acquisition profits. Share of post acquisition profits. How much post acquisition profits? How much is the post acquisition profits? How much is the post acquisition profits? 3.2. Okay. 3.2 into how much? Into 30%. How much you will get? $0.96. Okay, 0.96 million. Depreciation. Is it right? Depreciation. How much? 1.5 divided by 30 years. Is it right? Divided by 30 years into 0.3. Is that into 0.3? How much you'll get? 1.5 divided by 30 into
0.015.
0.0015. Okay. You have unrealized profit also. Is it right? Unrealized profit. How much is unrealized profit? They have unrealized 550. Is it right? 0.55. Okay. 0.55 into 0.3 into 0.3. 0.55 into 0.3. Is it right? Here now how much you'll get? 0.165. How much you'll get? 0.96 minus 0.015 minus 0.165. Is that 0.0?
1.88.
Huh?
1.88.
Okay, 1 minute. 778. Okay. This is B. Is it? This is B. NCI equal to A plus B. 1. Is it right? NCI is equal to NCI is equal to A is how much? 1.1 million. B is how much? 0.78 million. It comes to how much? 1.880. Is it clear?
Yes, it's clear.
When a gain on bargain purchase bar negative goodwill. Is that we have not used the word bargain purchase, but bargain purchase is otherwise called as negate. IFRS 3 business combination require entity to first of all review the measurement of all the assets, liabilities and transferred in respect of the means what happens if there is a negative goodwill. If there is a negative, what IFRS says to have the review is that you have to review. We have to review the measurement of assets, liabilities, consideration. Is it right? With respect of the combination. When a bargain purchase is confirmed, how it is going to be recognized? How it is going to be recognized? See what happens. See the thing. Bargain purchase, is it right? Bargain purchase is nothing but you think from the parent company. Okay, we have to think from the parent company. What is the carrying amount? Carrying amount is 100. Okay. What is the purchase consideration? We put like this. It is better to put like this. Okay, 1 minute. See, purchase consideration is how much? Purchase consideration is 70,000. Now we put all the assets of NCI, all the things, assets of NCI, all the things. Is it? How much is there? It is 100. How much we are paying? Is it right? What we'll get? We'll get how much? 30,000. Which is nothing but a negative goodwill. It is beneficial to the parent company or it is not beneficial to the parent company. How much is the net assets? Net assets are 100,000. How much you are paying? You are paying only 70,000. You are paying 70,000. Now, how much? See, for it is a goodwill. Is it right? It is a goodwill. But how it has to be recognized? It is credited directly to retained earnings. Can we do that? It is credited to profit and loss account. It is debited to profit and loss account. It is deducted from the positive goodwill. There is first thing, see, multiple choice questions, elimination. There is no, we have never ever learned that there will be two goodwills will be there. Is it right? Whether you will have positive or whether we have negative. It is credited, we never do any adjustments directly to the retained earnings. Anything is to the retained earnings, anything will be the retained earnings, it will be what? It will be routed through what? It will be routed through profit and loss account, income statement. Is it right? Now we have two options, whether it is credit or it is debit. Which one we will do and why?
It will be credit to profit and loss account.
Exactly, because see you are because you are paying less and you are getting more. It's not, I cannot say income, but it is a gain. Is it? Gain on purchase. Is it? Gain on purchase. One side it is negative goodwill, another side it is a gain. If it is gain, or see what nominal account says. Nominal account says debit. Nominal account says debit all expenses and losses. All expenses and losses. Credit all incomes and gains. Next, on 1st October, Anita purchased 75,000 of Bintus. Is it? It is A and this is B. This is A and this is B. How much they have purchased? 75%. When they have purchased? October 2005. Is it October 2005? Okay. When the Bintas retain earnings, is it right? It is how much? It is going to be 25%. How much was the retained earnings? Retained earnings were 90,000. Okay. On September 2007, means October after 2 years. Is it? After 2 years. Extract from the financial statements has been equity shares, retained earnings. Which of these, what is the total equity which should appear in Anita's consolidated financial position? Tell me how we can do.
We will calculate the return earning of the parent company.
Retain earnings of?
The parent company of Anita.
How much is the retained earnings of parent company? 300. Is it right?
Yes.
300.
Yes.
And what about the subsidiary company? How much they have purchased? They purchased how much? They purchase they have 75%. Is it? When they have purchased 75%, definitely on the date of acquisition, how much is the retained earnings? 190.
90.
Okay, 190 means what will happen? 150. Is it? 150 minus 90. Okay, 150 minus 90 into how much? Is it? This is the when you have purchased, it is a pre-acquisition profits. Is it right? Into how much? Into 75.75. How much you will get?
45.
45,000. Is it right? 45,000. What they are asking us? They are asking us the total equity. Total equity of what? Anita's company. Is it right? Total equity of now. Anita company. Equity is how much? Equity is how much? Equity is 125. Okay. Put it as A. Is it? Retained earnings. Is it? Retained earnings. Retained earnings of Anita. Is it how much? Retained earnings of Anita is 300. Add. Is it? Share of pre-acquisition profits. Is it right? Pre-acquisition profit. Profits as on 30th September. Okay. 2007. How much is the profits as on 30th September 2007? 150. Is it right? Minus profit as on, is it right? 1st October. Okay, 2005. How much? 90,000. How much is there? The balance is 60,000. is a share. Okay, is it now into 0.75, is it into 0.75, how much? 45, is it how much you'll get? 345. Okay, this is A, this is B, is it right? Total equity is A is how much? A is 125, B is how much? 345, 074. Is it clear? Okay.
Okay.
Take your time. I'm waiting for your no. Don't rush. Okay, you go through it. I'm giving you time just to make sure that you should understand the process again. On 1st October, Bash borrowed 6 million for a long term of 1 year. 1 year only, okay? Exclusively the finance the construction of a new piece of production equipment. The interest rate is how much? 6% and payable on the maturity of that. The construction commenced on 1st of November. See, 1st October and 1st November, okay? 1st October and 1st November. Is it right? But no construction has took place between 1st and 31st Jan. Means there is no construction for how many months? No constructions for 2 months. And is it at 1 month delay? Is it at 1 month delay? Is it at 1 month delay? 2 months no construction. Is it 2 months no construction? And what? How many means? Is it 3 months? Means how many is there? 9 months. 9 months effective. The duty employee is taking industrial action. The assets are available for use for 31st December. Okay, fine. After the end of the year, how much is the cost of the 6 million? Using the pull down approach, select the correct figure of the carrying amount in the production of equipment of the financial position. How we can do? Tell me, please. Any idea?
No idea.
Simple. You have to pick up, Shifa. You have to pick up. Okay? Very simple. How much they have taken loan? Very simple. Very simple. How much they have taken? What is the what is the what is
6
the
million.
production cost? Simple. Production cost is how much? Production cost is 6 million. Okay? Fine? No. We have to capitalize that cost. Is it right? Capitalization of cost. Which cost we have to capitalize? We have to capitalize the interest. How much is there? 6 million into, what is the rate of interest? 0.06 times 9 by 12. Khalas. How much will get? How much?
0.27.
0.27. That's all. Answer is again. I am giving you time. Read question, see the solution. Is it okay?
Yes, it's okay.
If you need time, tell me. Okay, 1 minute. Just say 1 minute. I will wait for you. Section B. Okay, section B. Definitely, they will put one scenario and they will ask you to do. Okay. Now, first, what you have to do? Just very briefly, in accordance with what is the we are talking in terms of depreciation charge. Okay, we are talking about depreciation charge. In accordance with which of the following definitely not an indicator, is right? Often potential impairment. Here we are talking about what is the impairment loss. Okay, in accordance which of the is true regarding cash generated units. Okay, and in accordance to IAS, what will be the carrying amount of fine. Okay, now yes, what they say, the please use the grid provided in the two of the candidate answer to record the answers, but do not write. Fine, each question carry two. Okay, we don't want this. Result we know. Alhamdulillah, don't worry. Aperture has 3 year end 31st December and operates a factory which make computer chips for it purchased machine for how much? 880,000, which has a useful life of 10 years and depreciated on the straight line basis. Time apportioned in the years of acquisition, and the time apportioned means if you have effective months you have to take. Okay, the machine was revalued on 81,000 July 2004. there is no charge change in the useful life. And a fire at the factory damaged the machine, leaving it with lower when it has been damaged 2006. Is it 2006? It is 2004, means after this. Is it right? The accountant considered that a prototype company will need to recognize the loss in damage. The accountant has ascertained the following information. Fine. 2006. We are talking in terms of what? We are talking in terms of 2004. Means we don't need this second information. We need which information? This is related to question number 16. Okay, this is related to this question number 16. Next, what they are asking, what is the depreciation charge? Okay, what is the depreciation charge? Fine. When they have purchased they have purchased on 1/1, is it right? 1st July 2003. How much? 80,000. Is it right? 1st July 2003, 80,000. When they are considering this 31st December, means 1st July 32, 31st December 2003. This is the financial year ending. Is it? It is for how many months? It is for 6 months. Is it depreciation? Is it depreciation for 6 months? How much is the what is the straight line basis? Is it right? Straight. What is the 10 years? Means 80,000 divided by 10 into 6 by 12. Are you okay? Is it okay?
Yes, it's okay.
It's okay. See, now how much you will get? You will get 4,000. Okay. Next year full year. Is it right? Next year how much? Is it right? See, they are doing on 31st December, but when there is a revaluation, the revaluation is when? Revaluation is on 1st July. Is it right? Revaluation is on 1st July. Is it right? Means revaluation is on the 1st July. Means from 1st January 2004 to 1st July 2004. How many months? 6 months. Okay. What is the revaluation amount? 81,000. Is it right? 81,000. 81,000. 81,000 into 6 by 12 divided by how many years?
10 years.
Huh?
10.
How will 10 next year? Second next year. Reevaluation is done. Reevaluation is done. Already 6 months is over. 6 months of the first year is over. Is it right? We are in the second year. We are in the next second year. Is it right? Second year, all we are taking for 6 by 12. Is it right? We are taking for 6 by 12. Means we have to see, there are two ways. 1 minute. 81,000 divided by divided by 9.5. 9.5, no, it will not work. 81,000, 9.5 into 12, is it? 81,000 divided by 114. No, no. Is that right? How many years are there? See, how many years are left? 9 years. Is that 9.5 years actually, if you take into consideration? Even it is not 9 years. Is that? It is 1 year is over. No. It's right. We are taking for full year. We are taking for a full year. But here what we are doing? We are converting it into 6 months. Is that? We are converting it into 6 months. Is that? We'll take it for full year, okay? For full year, but we convert it into 6 months. Last year we will take into the consideration the 6 months. Oh, that is not our case. How much we'll get?
4,500.
4,500. Total is how much? 8,500. Is it okay?
This is okay.
In AIS 36, impairment consists a number of examples of internal and external events which may indicate the impairment of the good asset. We have done this. If we done in one of the questions, same thing. They will ask you what are the internal indicators and what are the external indicators. Okay, this is the repeated question. In accordance to IS 30, which of the following definitely not an indicator of potential impairment? The expected fall in the market value of one or more assets. This is internal or external?
Internal.
Market value. If market value, this is external. Adverse change in the economic performance. Internal, external.
External.
This is economic performance. You have purchased the car, is it right? You purchased the car, your car, is it right? Now your car value has been decreased when you are selling it. It is internal, external?
Internal.
Your car, you want to sell the car, you will go to the market, your value of the car is decreased. Internal means if it is used for your own purpose. External means the moment you take your product in the market, market will give you a different value. If market is giving you a different value, it means it is external. You are using your car Is it right? Your performance of your car is decreasing. Is it? Your performance of your car is decreasing. If your performance of the car is decreasing, it means it is internal. A significant change in technology environment, making software is obsolete. It is internal, external, or no? You are getting new versions every time. You are getting new versions every time. It is internal, external.
External.
External. The carrying amount of an entity net assets being below the entity market capitalization. This is the carrying amount and this is the market value. Internal, external, or no?
No.
No. Neither will. This is not going in. No, in this is this. This is not an indicator. Okay, next. Using the pull down, select the total impairment loss. Is it a total impairment loss of apartheid company mission? Where is that? Okay. Carrying amount is how much? See the thing. This is with respect to what? This is with respect to. This is with respect to. This is with respect to. This is with respect to which question? This is respect to question number 18. The carrying amount is how much? 60,750. The equivalent new machine is how much? 90,000. The machine could be sold in the current condition 45,000. Dismantling cost is how much? 22,000. If the current condition the machine could operate the 3 more years, which gives a vehicle of a value in use figure is how much? 36. How much? Now you tell me. What is the impairment? They are asking what? What is the impairment loss as on when? As on 1st October.
The carrying amount is more than recoverable amount.
How much is recoverable amount?
Recoverable amount, you have value in 38,685.
That is after 3 years. We want now.
So it will be nil.
It will be
Nil. Because we don't have a recoverable amount.
the machine is cold in current condition. Very simple. Very simple. How much is there? I will remove this, okay? I will remove this after this. How much is the carrying amount? Recoverable amount. First we take into consideration recoverable amount. How much is the recoverable amount? 45,000. How much you are talking about dismantling cost? 2,000. Is it right? How much is the recoverable amount? 43,000. Carrying amount is how much? 60,750. What is the difference?
17,750.
That's all.
Okay.
Recoverable amount. Is it right? Is it a recoverable amount? Is how much? How much it is? It is fair value is how much? Fair value is 45,000. Okay. Fair value is how much? 45,000. We have to deduct the dismantling cost. Is it right? Any cost, selling cost, any cost. How much? 2,000. It comes to how much? 40,000. Impairment is what? Impairment is that you have the carrying amount. Is that carrying amount is how much? Carrying amount is 60,750. Is that? The recoverable amount is how much? Recoverable amount is less. Is it right? 43,000. Difference. Difference is how much? 17,750. This is the impairment loss. Is it okay?
Yes, it's okay.
It's a simple. Is that you have little bit okay? Next, the accountant decided that it's too difficult to rely on cash flow to this one of the machines, and this will be, and that it would be more accurate to calculate the impairment on the basis of a factory as a cash generated unit. In accordance to IS 30, which of the following is true regarding cash generated units? Just before examination, you revise these conditions. Is that every exam they will give you some questions on CGU? Is that some questions on CGU? Now you tell me. A cash generated unit to which goodwill has been allocated should be tested for impairment every 5 years. A cash generated unit must be a subsidiary of the parent. There is no need to consistently identify cash generated units based on the same types of assets from period to period. A cash generated unit is the smallest identifiable group of assets for his independent cash flows can be identified.
The answer will be the last one.
Exactly. Alhamdulillah. Is it? Yes. It is the smallest identifiable group of assets. Next. What is the carrying amount? Okay. On 1st July 2000, it is discovered that the damage of the machine, I will explain and I will give 1 minute time to you to think and tell me the answer. Is that if your answer is right, I will go forward. If answer is a little bit, then I will explain. It is discovered that the damage to the machine is worse than originally thought. The machine is now considered to be worthless and the recoverable amount of the factory as a cash generated units is 950,000. At 1st July 2007, the cash generated unit comprised the following assets. Buildings are how much? Buildings are 500. Is it right? Buildings are 500. Plant and machinery 335. Goodwill 85. Net current assets 250. Is it right? How we used to do? We used to do particulars. Is it right? We used to say the how we will put the columns. Buildings is there. Is it right? Buildings is there. Plant and machinery is there. Plant and machinery is there. Goodwill is there. And net current assets is there. Is it right? Net current assets is there. Fine. Net current assets is there. Okay. How much is the values? Is it buildings is how much? Buildings is 500. Plant and machinery is how much? 335. 335. Goodwill is how much? 85. Okay. And net current assets how much? 250. Net current assets will remain same. Okay. 170. Is it right? Now, what is the fair? 1 minute. Which chapter it is? It is IS 36. Which chapter?
It's impairment. Impairment 4, chapter 4.
Chapter 4. Is it right? Impairment for chapter 4. Carrying amount, impairment, recoverable amount. Carrying amount, impairment, recoverable amount. This is the carrying amount. Okay, this is the carrying amount, impairment, and this is the recoverable amount. How much is the cash generated units? 950. What is the difference? Impairment is how much? 1170 minus 950. How much? 220. Okay, 220 is the impairment. See, this amount will remain same, net current assets. Current assets will remain same, okay? Now, goodwill will become 0. 220 is the value, okay? Goodwill will become 0, always, okay? The first target is goodwill. Is that the first target is goodwill? Now, is that now? How much is there? Is it right? How much is there? 220 minus 85. It comes to how much? It comes to 5, 11, 130,
135.
135. Okay? 135. This 135, is it right? This 135. What is the value of this true? This true is 835. Okay, 835. Okay, how much is the buildings? Buildings is nothing but 500 divided by 835 into 135. How much you'll get?
81.
How much?
81.
500 divided by 835 into
81.
Yeah. 1 minute. $81. 500 minus 81, 419. Okay, and 835 into 135.
54.
How much?
54.
54. 54. 335 minus 54,
281.
280. Approximately. What is the nearest value?
280,000. 838.
220 minus minus 85. Wrong. How much is the carrying amount including the damaged machine? Carrying amount is how much? Including the damaged machine, carrying amount is how much? 35. Okay, including the damaged machine, carrying amount is how much? 35. 1 minute. This will change. These have two things. Okay, these are having two things. One is 300 and another plant and machinery is how much? 35. Okay, another one is how much? 35. Okay, this is the damaged one. Okay, this is the damaged one. Now you have the goodwill is how much is the balance amount? 135. Is it right? When it is a damage amount, this will become minus 35. Is it right? It will become minus 35. Okay. Now, how much you have? See, total is how much? Total is 135. Goodwill is how much? Goodwill is how much? Goodwill is 85. Damage is how much? Damage carrying amount is 35. Is it right? Carrying amount is how much? 35. Is it right? It comes to how much?
120.
120. Is it right? Now remaining is how much? Remaining is 220 minus 120, 100. Okay, 220 minus 1. Now, how much is there? 500 and 300. Only to this we have to make. Okay, only to this we have to make. Now, buildings is how much? Buildings is 500 divided by 800 into 100. It comes to how much?
$62.5.
62.5. And plant and machinery how much? 300 divided by 800 into 100. 37.5. Okay. Now what they are saying? They are talking in terms of plant and equipment. Okay. Plant. What is the carrying amount? Carrying amount is how much? Carrying amount is 300. Is it right? Carrying amount is in thousands. Okay. 300 thousands. Is it? This is the one side. Okay. 300. Okay. It is in thousands. It is in thousands. Okay. Next, depreciation is how much? Depreciation on plant and machinery. Depreciation on sorry. Exchange. Is it? Is it a share of impairment? Okay. Share of impairment. How much? share of impairment is 37.5. It comes to how much? 0.5262. Is it right? It comes to how much? Answer is see. I will explain you one second. How much is the buildings built? See, if there is one machine has been damaged, okay, one machine damaged and it is worthless, okay, it is worthless. The recoverable amount is worthless, is it? Means it is not going to. Now 500 is the carrying amount of buildings. 335 is there. In this 335, you have 335, 300 plus 35. Is that 300 plus 35? This is 35 which belongs to this one. 300 plus 35. Goodwill is there. Net current assets is there. Is right? Net current assets is there. Now net current assets amount will never change. Okay. Goodwill will totally go off. Okay. One has been damaged. It is worthless. 35. Is it right? Now, how much is the carrying amount total? 1170. Impairment is how much? They estimated how much? 950. Is it right? It is the estimated. It is not impairment. It is the impairment. Sorry. Is it right? It is impairment only. Is that 950? Now, how much is the difference? Is how much? 220. In this 220, what we have to deduct? We have to deduct the goodwill total amount, and we have to deduct the damaged goods. Is it right? Goodwill and damaged goods consist of how much? 120. Okay. Total impairment is 220 minus goodwill and the damaged goods is 120. How much is the amount is left? This is this amount to be allocated to plant and machinery and buildings. What is the plant and machinery and buildings value? 800. Is it right? Plant and machinery value is how much? 800. Is it right? It is how much? It is 800. Is it? 500 divided by 800, 62.5. 300 divided by 800, 37. They are asking us what is the value of plant and equipment when the impairment loss has been allocated. When the impairment loss is allocated, 300 minus 37.5, 262. Is it okay?
Yes, it's okay.
On January 1st, 2005, Block entered new lease agreements. What they are asking, according to I, which of the following is a characteristics of lease? What is the characteristics of the lease? You are taking a car on lease. Is that you are taking a car on lease? Okay, you are taking a car on lease. Is that? We'll come to this. We are talking about it. You are taking a car on lease. Ownership of the asset is passed to the lessee by the end of the lease term. Yes or no? You will get ownership of the car asset after the lease term.
No.
No. You are taking, just think, you are taking a car on lease. The lessor is responsible for general maintenance and repair of the asset. Maintenance is and repairs is yours, or they will give you petrol charges, all those things to you.
No.
No.
The answer will be C. The lessee obtain control over the use of the asset.
Alhamdulillah. You want to go to the, they gave you the thing. This see in this type of questions, fine, is it right? If you have to think at that point of time, what are the, how we can best proceed to that. Now for this they need we have to use you do the calculations. Is it right? For agreement 1, is it right? For agreement 1, where what is the finance cost charged to profit and loss account for the year 31st December 2006. Is it right? (2006), 31st December 2006. For 31st December 2000, this relates to a lease of a new plant and machinery. Under the terms of the thing, block must pay how much? Deposit 20,000 on inception of the lease on 1st January, followed by a 5 equal installments of 55,000. The present value of future payments is how much? 20. The rate of interest is how much? 11.65. Means they are asking for which year? They are asking for year 2. Is it right? They are asking for year 2. For which, what is the finance cost? Just I'm thinking how I can make it more simple. Just give 1 minute, 1 second. Year 1. How much is the lease payments? 20,000. Okay, 200,000. Is it right? How much is the interest cost? 11.65. Is it right? 11.65. 11.65. How much you'll get interest on 11.65? 23,300. Yes. Is it right? Here opening balance, payment, finance cost, closing balance. 1 minute, just give me 1 minute, okay? We don't have opening balance, is it right? They are giving only payments. Is it? They are giving only payments, is it right? How much is the payment? The present value of future lease payments, 200,000. Is it the payment? The present value of future lease payments. Just give 1 minute. 200,000. Payment is how much? First year, 55,000. Finance cost is how much? Finance cost is 200,000 into 0.1165. How much you'll get? 200,000 into 0.1165. It comes to how much? 23,300. This has to be finance cost has to be here, payment has to be here. Is it right? Finance cost is how much? 200,000 into 0.1165, 23,300. Payment is how much? Payment is 55,000. Okay, 1, 2, 3, 4, 5. 5 is equal to 2 plus 3 minus 4. Is it right? 2 plus 3 minus 4. 1 minute. Okay, plus 23,300 minus 55,000. How much? It is 168,300. Good. Second year, they are asking second year. Is that 168? Are you clear about the first year?
Yes, it's clear.
168,300. Okay. They are asking us what? They are asking us the finance cost. Is that? They are asking us the finance cost only. Is that? If they are asking us finance cost, 168,300 into 1165. How much is the finance cost?
19607.
19607. Once it's done, tell me next.
Done.
Next. The following calculations has been prepared. Interest for agreement 1. Interest is 15. How they calculated? Fine, okay. We are not concerned about that. Is right? We are not concerned about that. What they are asking us, how much the following calculations has been prepared for agreement 1. Interest, annual payment, balance. Interest, annual payment, balance. Interest, annual payment, balance. How will these obligations are shown in the statement as a now? Yes. Tell me please. How much is the non-current liability and how much is the current liability?
Current liability 44,120.
How you got it?
We deduct the closing balance 93,000 minus 49,000.
Good. 93,391, 49,271. Okay.
And then current liability will be
And non-current liability will be 49.
93.
The same one. This is the non-current liability.
How it will be 49? Because they went for 2007.
Which year it is?
2008.
2008. 2007. Is it right? 2007. At the end of 2007, is it? At the end of this is 2008. Is it right? When they have mentioned when they are taking the lease, they have taken it on. They have taken lease on 2005. Is it right? 2005. 2005. Is it 2000 means 31/12/2005? Okay, 31/12/2005, 31/12/2006. Is it right? 31/12/2006. Now, 31/12 to they are talking in terms of 31st December 2007. Is it right? 31st December 2007 means if you take 31st December 2007 financial position, is it as that means 1, is it right? It is as it is how much is the balance, is it right? In this balance, is it right? How much is the current liability and how much is the current asset? In this balance, is it right? Now, what happens here? First 1/1/2007 to 31st December 2007. Is it right? 1/1/2007 to 31st December for the next 12 months. What is the rule of the lease payments? What is the current liability? It has to be taken in for the next 12 months. If you take from 31st December 2007 means it starts from where? 1st January 2007. It starts from where? 1st January 2007. This year 12 months. Is it right? This year 12 months. Total amount is how much? Total amount is 93,391. Is that 93? Total amount is 93,391. Of this 93,391, how much we are going to pay next year? Next year, not these 12 months. Next means think that this is the what we are doing in the current year is the present 12 months. Okay, this 12 months we are going to pay a portion of 93,391 as a current liability. Next year we will pay the balance amount. This is the total amount, total total liabilities. Is that this is the total liabilities of this understanding point. See next year what? See the dates are very important. Is it right? From where we are starting? We are starting from 31st December at the end of the year. At the end of, they have given the total balance. Is right? They have given us the total balance. Now they want us to segregate between current liabilities and non-current liabilities. Is it? Next year, fine. Next year we are not concerned. They are not asking about next 2008. But 49,277 belongs to what? Next 12 months. Is that we are concerned about these 12 months ending 31st December 2007. That is the reason we will deducted 93,391. Whatever the next year amount is basically if you take into consideration, see the thing. How many years are there? 3 years. Is it right? 3 years. Last year, at the end of the last year, they say that we are paying. I think we are paying at the beginning of the month. Is it right? 5 starting the present value, the paid deposit and inception of the lease, followed by 5 equal installments on the present value of the lease payments. Fine. They have not mentioned anything. Is it? This is the total amount. In this total amount, we have to deduct the amount to be paid in the next year. That is going to be non-current liability for this year. And this year current liability is how much? This year current liability is 49,271. Is that not clear now?
It's clear, yes.
Then why? Okay. Think over it. If anything is there, I'm here. You can ask me any questions, any doubts are there, you can ask me. I will access and I will get back to you immediately. Don't worry about that. Okay? Any doubt, whether we have done or we have not done. For agreement 2, what is the charge to profit and loss account for the quarter ended? What they said in agreement 2, that this 9-month lease relates to a van. The fair value of van is 120 and estimated life is 5 years. The agreement requires Blocks company to make no payment in month 1 and 4,800 per month in months 2 to 9. Block wishes to take advantage of any recognition exemptions available for IFRS 16. Is it right? See, they no payment for 1 month. Is that how many months they are taking? They are taking it for the lease of how much? 9 months. Means effective months will be how much? effective months will be 8 months. Is it right? Effective will be how much? 8 months. Now, what they are asking us? They are asking you, see how, tell me how we can do. Yesterday we have done similar to this.
First, we will take the lower useful time.
How much?
We will take the 9 months for lease.
How many months we are paying? We are paying for how many months?
9 months.
How month? 1 month free, they told me now.
It will be 8.
No payment in month 1. Then 4,800 into how many months?
8 months.
8 months. How much you will get?
$384,000.
How much?
384,000.
38,400.
Yes.
And next, for how many months they are asking? Quarter. Is it right? 3 divided by 12. Is it right? 3 divided by 12.
$9,600.
1 minute. How much? 38,400. Mm-hmm. 38,400. Is it right? 38,400. 38,400. How many months they have taken? 9 months. Is it right? They have not taken for 1 year. Why we have to take 1 year? They have taken only for how many months? 9 months. Is it right? They have taken it for 9 months. And what is the question? Yes. They have taken it for how many months? They have taken it for 9 months. Now, how many quarters will be there for them? They have taken only for how many months? Lease is for how many months? Lease is for 9 months. Is it right? Lease is for how many months? Lease is for how many? Then what we have to do? Then how we have to do? How much we have to take?
We will take 8 months only.
That 8,400 quarter they are saying how many this is it right? Effective quarters how much is there? How many? See, you have 4 quarters now. Effective quarters are how many? 3 quarters. Isn't it? Effective quarters are how much? 3 quarters. See the things. How much we are paying? This we are paying for how many? This we are paying for 9 months. Okay? This we are paying for 9 months. Quarter means how much? 3 months. Okay? Quarter is how much? 3 months. Is that 3 months? 3 months. Now, we have taken it for 9 months. Is it right? 38,400. Yes. Is it? 38,400. 38,400 into 3 by 9. 3 months divided by 9 months. Because see the things, it is for how many months? 9-month lease. Yeah, total how many months? 9 months. Out of the 9 months, we have to. What is the question? They are asking you for the quarter. Is it right? They are asking you for the quarter. How much you will get? Are you understanding? Yes or no? First tell me. 4,800. 1 month free. How much we got? 38,400. Okay? 38,400. This is for how many? This is for the 8 months. Okay? 1 month free. Now, see what happens when you negotiate, is it right? See, when you negotiate, you are going for a car and they say that car is 30 reals per month, per day. But you will say that, yes, what I want. They'll say that, yes, we want for 10 days. Then you will say that, okay, 300 reals. Now you will ask, what is the discount? They say that they will give one day discount. Means how much you will get paid 270 reals. Is it right? 270 reals. But you will not take, it is 1 day free. 270 divided by 9. Is it right? 270 divided by 10. 270 divided by 10 means effective amount will be 27. It is not 30 reals. The same concept you have to apply here. They say that the lease payment is 4,800 for 9 months. Okay? They are giving you 1 month free. Is that? They are giving you 1 month free. Okay? Now, when they give 1 month free, 38,400. Is that? Remember this. This question is repeated, I think, 3rd or 4th time. Is that? 3rd or 4th time it has been repeated. 38,400. This is for 8 months we are paying. 8 months. This is a 9 months lease. In 9 months, is that? How many quarters will be there? 3 quarters. 3 months, 3 months, 3 months. Okay? 3 divided by 9. It comes to how much?
12,800.
12,800. Question 24. Just check again. Once it's clear, tell me.
It's clear.
Next. For agreement 3. For agreement, what profit should be recognized in the year end as a result of sale and lease back. Is it? What profit should be recognized? What is agreement 3? The sale and lease back relates to cutting machine. Purchased how much? Purchased for 300,000. The carrying amount is 250,000. Okay. The purchase is how much? 300,000. The carrying amount is 250. On January 1st, it was sold for how much? 370, being its fair value. Okay. January 1st, 2005. Then blocks will lease the machine back for 5 years. The remainder of the useful life is 80,000 per month per annum. The present value is 350,000 and transaction satisfy the IFRS criteria revenue. Is it right? Recognized as a sale. What is the profit on sale? The carrying amount, see, when they have sold it, they sold it on 1st January. Is it right? It was sold. How much they have sold? They sold it for 370. Okay. What is the carrying amount on 31st December 2005? 2004, 250. Is it right? 31st December 2004 is 250. The recoverable amount minus the carrying amount, 370 minus 250, 120 is the profit. Is that 120 is the profit? Now, how much is the annual, how much is the is it? Okay, that's good. How much? First you have to calculate profit. Is it right? First you have to calculate profit. Now what they are asking us is what profit should be retained and what profit should be transferred. Is it right? When you are saying when it is what profit should be recognized, it means what profit should be retained and what profit should be transferred. First you should know what is the profit. Okay. First you should know what is the, how much is the sale value. Sale value 1/1/2005. Is it right? How much? 370. Is that carrying amount? Is it right? Carrying amount on 31st December 2004. How much? 250,000. Profit on sale is how much? Profit on sale is 120,000. This 120,000 you have to divide. Is it right? This 120,000 you have to divide. How you have to divide? Any idea?
No idea.
Hmm?
No idea.
120,000 you have to divide. Is it right? 120,000. How much is the sale value? Sale value is 370,000. Is it right? For 370,000, profit is how much? For 370,000 of sale, the profit is 120,000. Okay? Is it? What is the present value? Present value is how much? 350,000. Is it? For present value is how much? 350,000. For 350,000, profit is how much? See, for 370,000 of sale value, I will write like this. Is it right? I will write like this. Is it right? For 370,000 of sale value, profit is how much? Profit is 120,000. For 350,000 of present value. We have to know how much you have to retain and how much you have to transfer. Is it right? Profit is question mark. 350 divided by 370 into how much?
120.
120. It comes to how much?
113.
113.
513.
51.
0.5.
Put 514. Nothing will happen. Don't worry about that. In the examination, if you find nearest value, go for the nearest value. Rounding off. Okay. Now, see what happens. This is before you sold, at the time of sale. At the time of sale, 120,000 is the profit. How much you have the right. Is it right? You have the right is how much? This has to be retained. Total profit is how much? Total profit is 120,000. Is it right? Minus retained is how much? Retained is 113,514. Difference is how much?
6,468.
How much this has to be? This has to be recognized as on 31st December 2005. Is it right? First you have to calculate the profit. Okay. That profit for current, how much when we sold it, in that year we have to recognize it. Is it right? Current year. Now, till that point we have leased it. Now we have sold it. Is it right? Before we have sold it, that profit belongs to us, and after selling it, after converting it into sale, what is the current profit? Is it right? For 3,700 of sales, 370,000 of the sale, profit is how much? 120. For present values are how? Present value, we are not taking the present value profits. Is it right? Present value is 350,000. Profit is how much? We'll get present value profits. Present value profits, it belongs to you. Is it right? It belongs to it belongs to the things which have to be retained. Is it? From the total profits, you have to deduct the retained profits. Then whatever the profits belongs to the current year as such. Just go through it. I know you should get a doubt. Is it right? Anything is there? Tell me. I will clear.
It's clear خلاص.
We'll complete section A and section B, okay? We complete section B, we will complete. You prepare yourself. You take your time, you relax, revise, everything you do. If you want class morning or evening, okay? Evening after around, you just let me know whenever is there. Today is what? Today is Sunday. Monday, today also I am available. Tomorrow also I am available. Whenever you have the time, when you wish to continue the mock question paper, we will do.
Okay.
Okay? Now,
Okay.
Mighty has the following relates to that. We'll complete these 5 questions and then we'll stop.
Okay.
Mighty provides hardware, software, fine. We don't want this. Mighty has developed an accounting software. The company offers a supply and installation service 1000 and to separate 2-year technical support 500. Alternatively, it has offered a combined goods and service contract which includes both the elements of 1200. Okay? Payment of the combined is due 1 month after the date of installation. In December 2005, they revalued the headquarters. Prior to revaluation, the building is 2 million and it valued to 2.5. Revaluation gain was there. Mighty also has revalued sales office. The office has been purchased for 500 and subsequently it has been reduced. It is loss. Revaluation loss. No depreciation has been charged and any payment is allowable for tax purpose. Mighty income tax is 30%. Good. Theory, concept, they are mixing the concepts as well as calculations. Okay. In accordance to IFRS 15, revenue from contract with customers, when should Mighty IT company should recognize revenue from the combined goods and services? Tell me. One minute. I will go for IFRS 15. Okay. IFRS 15 chapter where it is 11. Is it right? Yes. 5-step process is very important. Is it right? 5 steps. Identify. I told you, if you remember, I have written here also MCQ. Is it right? Identify the contract, identify the separate performance and obligation. Is it right? What is the separate performance and obligation here? Here there is a installation. Is it right? There is a installation and there is a technical support. Is it right? There is a installation and there is a technique. Determine transaction price, allocate the transaction price on performance obligation. Is that right? See, this is 5-step process. I think I have put one star mark also. Is that? Is that MCQ? I have written it as MCQ. See, listen. Is that? I have written it as MCQ in section, they have given in section B. Fine, no problem. Is it right? 100% executed. 100% executed. Ownership will be transferred when sales. Is it right? Completion factor element. Is that completion factor element? Is it right? These are the conditions. Once when you are doing revision, revise, write down somewhere. You write down in your notes. Is that IFRS revenue 5 steps? Contract, obligation, price, allocation, and recognition. Is it right? Contract. Is it? This is what it says. Contract, obligation, price, allocate, recognize. Contract, obligation, price, allocate. Okay? Allocate and recognize. Fine. 5-step process. Determine. Okay? Fine. Coming back to this. Now you got the answer. If you put the things, you will get. Yes. What is the answer?
Didn't it?
Huh?
Can you repeat it again?
What they have done, see, what they are asking, is it right? What they are asking, see the thing, when we have to recognize it, is it right? When we have to recognize the revenue, is it right? Now, is it right? See, they revalued sales. No, we don't want this. We want, yes. Huh. They have developed software. The company offers installation service, is it right? And separate 2-year contracts. Alternatively, it offers combined goods and services, which includes 12,000. Is that, see, this is the issue. Is it right? They have the installation. Is it right? They have the installation and they have the support. What technical support? Technical support is not right now. Technical support is for next 2 years. Is it right? For next 2 years. And installation is right now. Yeah, it's a matching concept. Is it right? It is a matching concept. Matching your revenue with your expenses. Matching performance. If it is performed, take it. If it is not, there is no performance, there is no take it. They have to recognize the revenue. Is it right? When they have to recognize the revenue, supply and install, you have 1,000. Then you have to, the moment you supply and you install, you are supplying, you are doing the business. You will supply and install. You will take your charges. And you are giving the service for next 2 years, not now. Is it right? Not now. Next 2 years. When the service is due, then only you will charge. Fine. Supply install when payment is made. No. You will supply and you will say that I will wait for payment. No. The moment you supply and install, you want payment. Is it right? You want payment. Fine, this is right. When you are talking about the things, this is right. But supply, when payment is made, no. We cannot say when the payment is made. We have to get payment on installation. Supply and install on installation, fine, correct. But technical support, it has to be done over a next period. Is it right? It has to be done on a next period. This is also wrong. This is all. Supply and install when payment is made. No. It has to be done right now. On installation. Is it right? On installation. And technical support when payment is made. No. Over 2 years. 5 steps. 5 steps of IFRS 15. Means when you install, when you supply and install, you want your payment. Fine. Support you will give next 2 years. Is it right? Fine. Nobody will pay you right now. Is it right? Nobody will pay you right now. They will pay you after, at the end next year, they will pay next year amount, and after 1 year, this is like a maintenance contract. Every year they will pay. Is it right? Every year they will pay. What is the answer for this?
A.
A. For each combined contract sold, how much they are talking about combined contract sold? How much they are talking about combined contract sold? A combined goods service which includes both these services is how much? 1,200. Is it right? 1,002. What is the amount of revenue which mighty company should recognize in respect of supply and installation service? For total price of 1,500, is it right? For total price of 1,500, supply and installation is how much? Supply and installation is how much? 1,000. Okay. For total price of 1,200, supply and installation question mark. 1,200 divided by 1,500 into
Eight hundred.
800. 800 will be for supply and installation. Is it right? And 400 is for technical support. Is it okay?
Yes, it's okay.
Mighty sells a combined contract on for June 2, the first day of the financial. Mighty financial statement prepare according to FRS. Using the down list, which of the total deferred income which will be shown in the financial statements of 2006. Is it right? See, this is what this is. That is 1st January 2006. Is it right? Cells. Is it right? Next. They are preparing on what? 31st December 2006. Financial statements prepared. Is it right? How much they are charging? See, one second. It offers a combined which it a 2-year technical support service for how much? 2-year technical support service for how much? 500. Is that 2 years technical support service is how much? 500. 2 years. What is the amount? 1200. Is that 2 years? Understand? Keep it in mind. 2 years technical support is how much? 500. Okay. We have to write. But then only it will be easy for us. Okay. Then only it will be easy for us. Is it? Yeah. 2-year technical support. Is a 2-year technical support is how much? 500. Okay. The supply is how much? Supply and installation is how much? Supply or installation is 1200. Is it right? Is it right? While supply and installation is how much? 1000. Individually how much? 1000 plus 500, 1500. Okay. Combined. They sells combined contract. Is it right? They say combined contract. Is it right? Combined contract. Means first what you have to do? Combined contract. You have to get the combined contract. Combined contract revenue for they say that yes, the deferred income is for what? Deferred income is for technical support. Deferred income is for technical support. First, you should know what is the value of combined contract. Is it right? Individually, they will sell. How much they are charging? 500. Is it right? If they said combined, how much is the thing? Very simple. Very simple. How much we have calculated here? Here, how much is the profit we calculated? 500. Is it right? How much is the technical support? 400. Is it right? This is for whom? For how many years?
2 years.
2 years. Is it right? Current liability and non-current liability. Deferred income is how much? Non-current liability. Deferred income will be how much? 200 for the current year, 200 for the next year. Is it right? 200 for the current year, 200 for the next year. Next year income is the deferred income. Is it right? Next year we will not put, sorry, we are not putting a current liability. Is it right? This is the current year income. Is that current year income is how much? Current year income is 200. Deferred income is how much? Deferred income is 200. Is it okay?
Yes, it's okay.
In accordance to IAS 12 income tax, what is the impact of property revaluation of income tax expenses for the year 31st December 2005? Which one? Property revaluation. Okay, property revaluation. We have to check what is the property revaluation. Is that right? Company headquarters is how much? 2.5. Okay. Mighty also revalued a sales office. The office has been purchased for 500, but subsequently on defense it revalued 400. No depreciation charge on the sales office, and any impairment loss is for tax purpose. What is the tax purpose? Tax purpose is this one. Fine. Now, yesterday we have done this. We have done, you can recover it. Is it right? Is right? We have done this. If any revaluation gain, is it right? Any revaluation gain, is it right? It has to be charged to whom? Other comprehensive income. Is it right? Any revaluation loss, is that revaluation or gain or loss? Is it right? Now, if what they say that there is a taxation. Is it right? There is a taxation. Is it right? There is a taxation of how much? 30%. If there is a taxation of 30%, it has to be charged to income statement, profit and loss account. Profit and loss. See, OCI is addition to profit and loss. Okay. The second part of profit and loss account. Okay. Now, how much is there? They have the value of how much? 500,000. The value has been decreased to how much? 400,000. Is it right? What is the loss? They're getting a loss of how much? 100,000. And when there is a loss, how much is the tax? 30%. It comes to how much? 30,000. Is it right? How much income tax will decrease? Income tax will decrease by how much? 30,000. Is it right? Income tax. I will write here also. Income tax will decrease. How much is the carrying amount? Carrying amount is how much? Carrying amount is 500,000. Is it right? Revaluation is how much? 400,000. Is it? Difference. I will not write. Is it? Difference. Difference is revaluation loss. How much? 100,000. Income tax benefit. 100,000 into 0.3, 30,000. Is it 30,000? What will happen? Income tax expenses will decrease by how much? Income tax expenses will decrease how much? Income tax expenses will decrease by 30,000. Check.
It's clear.
Next. Last one, we'll stop here. Okay. Next. In January 2006, the custom accountant of Mito produced a company draft financial statements. Okay, in January 2006 for the year ended 2005. He then realized that he has omitted considerable deferred tax. In 2005, there is a development cost of 200 has been incurred and capitalized. Development cost was deductible in full for tax purpose in the year it has been incurred. The development is still in progress on 31st December 2005. What adjustment is required to income tax expenses to account for a deferred tax? Tell me how much you have to. Very straightforward question.
It will be increased by 200,000.
They are asking income tax. The development cost has been incurred and capitalized. Development costs are deductible in full for tax purposes. Deductible.
So we will multiply 200 by 30%,
How much will get?
60,000.
60,000 will increase or decrease income tax? Deductible. Is
It will
it?
be decreased.
To be?
Decreased.
How it will be? To be deductible. When it is deducted, see, income tax is always a debit. Is it right? Income tax expenses will always be debit, and deferred income tax will always be a credit. It is a liability. Is it? Deferred income tax is a liability. What they say, what adjustment is required to income tax expense? Is it right? You see, they are saying that the development in full for tax purposes in which they have incurred. Is it right? What will happen? What will happen with respect to tax purposes? See, is it right? You are paying how much? What is the development cost? 200,000. Is it right? Development cost is 200. What they said, he then realized that he has omitted to consider what? To consider deferred tax on development. He has missed it. Is it right? He has not taken error of omission. He has omitted the 200,000. Means on 200,000 he has not calculated the tax. Now he has realized that on 200,000 he has to calculate the tax. When he has to calculate the tax on the 200,000, what will happen? The expenses will increase or the expenses will decrease?
It will increase.
It will increase. Is it right? It will increase. Are you okay with this?
Yes, it's okay.
No. Okay. I think I have sent you this question paper to you. Is it right?
Yes, right.
See, if you take my advice now, tomorrow also we will sit like this. We will have discussion. Is it right? Tomorrow is Monday. You have exam on Thursday. Is it right?
Yes, right.
Tomorrow, Tuesday also we'll have. Tuesday last session we will be there. Morning. Okay. Tuesday last session will be there. Is it right? I will give another mock exam to you. Okay. I will give another. Just do mock exam as much as possible. Okay. First revise it. What we have done. Then you will do the thing. By today evening I will send you the mock exam, and inshallah it will be what is there to. If you are free evening, just send me message. We will adjust the time and we will do one question now, one question tomorrow morning. If you are free and relaxed, if you have done your own work, then only you contact me. If you are thinking that you